Welcome to The Advice Show. I'm your host, Robert K. Elder, and it's tax season. So today we're talking with Tony Pagliuco, a tax preparer with Pagliuco, Opalis & Associates in Oak Brook. The Advice Show is sponsored by Shure, purveyors of professional microphones and headphones. Check them out at shure.com. That's SHURE.com. And The Advice Show is also part of the Sun-Times Media Locals podcast network. Tony, welcome.
Thank you, Rob.
Hey, so this year H&R Block, they have this huge ad campaign. They're saying that Americans have left $1 billion on the table, and some of that I'm sure is like things that people don't take advantage of, and change in tax law and all that sort of stuff. So that's primarily what I want to know. What are some things that people just don't take advantage of?
Right. There are many things that when people prepare their own tax returns, they just may not be aware of, and when you go to a professional tax return preparer, we're looking for those kinds of things that people may be leaving on the table.
Sure. So, Tony, what can people do differently?
Well, if one of the things that people can do is take advantage of health savings accounts.
Okay.
The government has tried to get us to have our own health insurance. There are obviously Obamacare's out there. Health savings accounts are a unique way of saving money, actually. If you're in a situation where you're not spending a lot on medical, you can get a high deductible health insurance plan, put a bunch of money into a bank account for yourself, and use that money for unreimbursed medical expenses. But if you don't use it, you can save that for the future.
Oh, great.
And you get a tax deduction.
Okay, what are a couple other quick ones?
Non-cash donations. People give away clothing and furniture and all kinds of items to charity that they don't want anymore. And in a lot of cases, those items are very, very good and usable items that these charities like Goodwill will take and sell at their stores. We have clients who'll come in and they'll say, yeah, I did give some stuff away. Well, but you need to list it out. You need to identify what the items are. There are many websites like the Salvation Army that provide guidelines as to what the value is for those items. And you'd be surprised at how many dollars that can add up to.
Sure.
But
and can you do that like up to $5,000? I'm sort of misremembering this.
$5,000 is the level where you need an appraisal.
Okay.
So if you're giving away a piece of artwork or an old clipping that somebody might find a lot of value in,
sure,
you need to have an appraisal. If it's clothing and toys and you're in a range of $10 or $15 per item, that's not what we're talking about. But
sure. And is there a basement for that, or is it just like, is it over $100, under $100? What is it?
At $500, you need to file Form 8283 and
sure,
list out the dates and the amounts and the name and address of the charities that you donated to. But
most of those places, like the Howard Brown in Oak Park and a couple other places, they actually have a form. You can just fill it out right there, right?
Right. Goodwill does. Some of the key there, though, is it has to be a 501c3 charity that you're donating to.
Sure. Okay. Let's do a couple of other quick ones.
Right. Some of when people are itemizing deductions, so you get to take a higher standard deduction if it's available, or you add up these certain deductions and you itemize. Most people that have a home and a mortgage and real estate taxes itemize deductions. Well, that makes, when you're itemizing already, you then are able to take other things as deductions. There's a miscellaneous section on that form, and if you're over 2% of your income, you can deduct that amount over 2%. And a lot of people fail to make the 2% because they don't include all the deductions that they're really entitled to.
Sure, such as?
Such as unreimbursed business expenses, using your car or your computer for your employer's benefit is a deduction, a tax deduction. Union dues, safety deposit boxes, the fee for having your tax return prepared.
Oh, that's right. So they can write you off.
Yes, yes, they can. That's a good thing.
Well, I also wanted to jump into just like common errors and misconceptions. So, part of the Obamacare program is being able to claim a dependent and whatnot. So, can you walk me through that?
Yes. One of the common misconceptions that people have is that they can pick and choose who claims dependents. Like for children,
right,
that's the most common dependency exemption is for your own children. And when they go off to college, as long as they're a full-time college student for 5 months out of the year, you can claim them as a dependent. It doesn't always work to the parent's advantage depending on income level. So often they say, well, I just want my child to claim himself.
Right.
But you can't do that. You have to go to the rule book, answer all the questions, and then figure out who is actually entitled to that dependency exemption, the parents or the child.
And so what are some of the ins and outs of that? Because, I think a lot of people who are sending kids off to college, like, why does it benefit them to have that child, or why does it benefit them to claim that person?
Well, you get a personal dependency exemption, so that's just a dollar amount that comes right off of your taxable income. So you benefit in saving taxes that way, and also that there are tax credits available for education. So the tuition that you pay, the fees and books that you pay for tuition, can result in a tax credit or a deduction. Actually, you get to pick whichever one results in the highest tax savings. The problem is, if your income is too high as a parent, those deductions and credits phase out. And so that's where the child would benefit if only the IRS would allow them to take the dependency exemption.
Well, and a couple other misconceptions. So tell me about, commuting to and from work. Like, can I, deduct that?
All right, that is a common misconception that taxpayers often think that driving to and from work is a deductible expense, and the IRS allows 56.5 cents a mile, for example, in 2013. Commuting is actually not deductible. So, it wouldn't be fair for somebody who lives a mile from work, not to get a deduction because they chose to be a mile from work, when somebody that lived 20 miles from work would get a tax benefit for that. I mean, that's kind of the reason. But going to and from work is not deductible. So you need to be on a company's business in order to get a business deduction.
Sure, and parking is also not deductible, right?
Correct. Parking's not deductible unless your business trip that you're on is, unless you are on a business trip. And
what about the clothing you wear? Because as journalists, we're all fashion plates.
Right. So, right, clothing is not deductible either. Basically, the rule is if you buy clothes for work, but you can wear them out in public, otherwise, it's not deductible. If you have to buy uniforms with a name tag on it and safety shoes and things like those are deductible because they're specifically purchased for the job.
And a couple of them. Tell me about Social Security benefits and charity work.
With Social Security benefits, there was a time when senior citizens that received Social Security didn't have to pay tax on it. Now, and it's been a while, but the government has changed that to where if your income is high enough, they want you to pay tax on your Social Security benefits. So not only may your Social Security benefits be taxable, but it's as your income's going up. So, for example, when you get to that point, if you have an increase in your income that's not Social Security and it causes your Social Security to become taxable, now you've got two pieces of income that you're going to pay tax on. So you're not just paying tax on your Social Security; you're paying tax on two pieces of income where the effective rate is much higher than the tax bracket that you're in, and people aren't necessarily aware of that.
Right, and there's a little misconception about charity volunteer work.
Oh, right. I get that question all the time. People want to be able to deduct the value of their service to charity, but you can only deduct expenses for money that you spend when out-of-pocket costs. So driving to and from a volunteer meeting, you can deduct the mileage for that, but the value of your time is not a tax deduction.
Right, it's a donation. Right.
Right, you're donating you're donating your services, and you can't say, well, I'm worth $50 an hour, so I'll take a deduction for if it's not that way.
But you can deduct things like paying a babysitter, right?
Right, that's one of the unusual deductions that people often don't realize that they can deduct. If you pay a babysitter so that you can do volunteer work, you can deduct the cost of the babysitter because again, you're out of pocket. You spent that money.
Well, and I want to talk about other sort of not odd but unusual tax deductions because they show up in the news every once in a while. The professional dancer who gets body augmentation and she's able to write that off. There's also things like you told me an example about a junkyard owner. Right,
a junkyard owner had a bunch of cats, and he was allowed to write off the cost of owning his cats, the food, the veterinarian bills, etc., because he let the cats roam free in the junkyard. They chased away pests like rats and snakes, and that made it a safer environment for his customers, and the IRS allowed that deduction.
I wanted to see that appointment where he took a junkyard cat and tried to wrangle it to the vet. but that's great. Yeah. So what are some other unusual ones?
There's a case where a furniture store owner, this gets a little dastardly, but a furniture store owner decided to burn down his building because his business wasn't doing very well. And he hired an arsonist, paid him a $10,000 fee, and then got a little too greedy, put a consulting fee on his tax return for $10,000. Got away with it up to the point where the IRS audited that $10,000 fee, figured out what happened, and sent him to jail for arson.
Yes. So don't do that. Don't do that.
Right.
What other, again, interesting odd tax deductions?
Yeah. If you are sick to a point where your doctor will write you a note that you need a certain type of therapy or exercise, there's a case where a emphysema patient was allowed a deduction for building a swimming pool in his backyard, because that provided the forum for the exercise that he needed.
Oh, very cool.
Yeah.
Very cool.
Yeah.
And I just want to talk a little bit about common tax credits. There's a residential energy credit. Can you tell me a little bit about that?
Yes, that's one that people are more and more aware of, and it's probably because the contractors are doing a good job of letting people know that whatever it is that their improvement, whatever improvement they're making, it may or may not qualify for this credit, and if it does, they need certification from the contractor. You can install exterior windows, exterior doors, a new roof that's meant to insulate the home for heat.
Right, it's all energy efficiency stuff.
All
right?
energy, exactly.
So
all energy
geothermal pumps, and are they like the green water heaters, that stuff as well?
Yes.
Oh,
yes.
Cool.
The credit amounts are up to, for example, like with windows and doors and such, there's like a lifetime credit amount of $500. That you mentioned, the geothermal, that credit's 30% of the cost of the project. So the government's very interested in solar, for example. More highly technical types of energy saving. Sure. You get a bigger credit.
The
for.
Ed Begley Jr. Tax credit.
Exactly. I'm sure Ed got lots of tax credits.
I think again, Ed Begley Jr. The actor and activist. I think the LA Power Grid pays him.
Yeah.
Like
right. Right.
Yeah.
I love that show when he was on for a while. I have a client this year who is investigating doing just that, installing solar panels and determining whether it makes sense, the extra heat and energy, I should say, that you can generate, you can sell to the government or to an energy company.
Oh, very cool. Yeah. Just a couple other ones. There's dependent care, and I care a lot about this because I have twins.
Yeah. So you twins?
Twins.
Oh,
yeah.
Oh, yeah.
It's almost 6 years old now.
Wow. Well, until 13, you can get a dependent care credit. That's the child care credit, actually. You can also get a dependent care credit for like an elderly parent or somebody who is your dependent. So clearly your children are your dependents. So right. That credit allows you to deduct, it's a credit, so it comes right off your tax bill. It's a percentage of the cost you spend for the care of your children while you and your spouse are working. So that one you have to have income for both spouses if you're married. Mm-hmm. If you're a single taxpayer, so the idea is that you're hiring somebody to watch your kids so you can go to work. You get a credit to offset some of the tax on that income you're earning.
Oh, very cool. So what else am I missing? Again, these common tax credits. I'm looking for stuff that's really utilitarian that people just don't do enough of.
Many of the credits are meant to be meant to help people who are in a lower income situation. While they're going to work, and maybe they're not making a lot of money, but the government wants everybody to work. So a lot of the credits are meant are targeted for people who are in lower income situations. So the earned income credit, for example, is a fantastic credit for, and as the taxpayer earns more, the credit goes up. Of course, as they earn more beyond, then the credit goes down because now once you make enough money,
you don't need the benefit. Yeah.
Right, it's there for somebody else. And the more children you have, the higher the credit.
Huh.
So I have clients who get that credit. It can be thousands of dollars a year, and it's refundable. So that means that if your tax is zero, you still get the credit. It's sent to you in the form of a refund.
Huh. Very cool.
Yeah.
Well, Tony, you mentioned a couple of websites you wanted to send folks to.
Oh, sure. Always, the IRS.gov website is always a good source of information. I mean, the IRS isn't there to help you, get tax benefits,
Sure.
but they certainly want you to take advantage of whatever's available, and they want you to understand it. So they want you to you do your tax return properly. And so if you go to their website, there is a lot of information. It's very easy. You can Google search IRS space anything pretty much, and if it's in a publication or at their website, you'll find it.
Okay. Where else?
There's another website that I like to go to called 1040.com. It provides a clear, concise explanation of many tax deductions. They have a great search engine, I think. When you can type in one of these credits, the name of a credit, you can type in the word credit. You'll get some very valuable information that way.
Okay. What else? What else am I missing?
Well, there's a couple of maybe tricks, so to speak, that are they're perfectly okay.
Sure.
For example, we were talking about commuting mileage before. Well, to and from work is not deductible because it's just getting you to and from work. Well, if your employer sends you out during the day, or if you're self-employed for that matter, and you go out on business for your own company during the day, those miles are tax deductible miles. If you live kind of far from work, and so your commuting drive is long, you can turn commuting miles into business miles by stopping at the bank, for example, on the way home. If you're making a deposit for the company, that trip from the office to the bank is a tax deduction. So you've effectively converted the miles to business miles.
Sure. So if you're going to see a client or that sort of thing.
Right. If you could stop at a client on the way home, you could stop and pick up supplies at the office supply store. That's an effective way to increase your business deduction for mileage.
Very cool.
Yeah.
What else? He's going over notes, people.
Let's see.
By the way, that's in like 11-point type. That's amazing.
Yeah, that's why I put my glasses in my pocket, because I can see up close just fine, but not across the room. Just going back to the interesting outcome that some people get. Illinois is into this, this whole phase of making marijuana, legal for medical purposes.
Sure.
Colorado's been doing it for a long time, and some of the other northwestern states. We've actually had this discussion in our office a few times over the last couple of years. The federal government does not allow tax deductions for any expense
things it considers illegal.
Well, exactly. So the state makes it legal to sell pot for medical purposes, but the federal government hasn't legalized it yet. So that's against public policy, and so you don't get a deduction. So these marijuana dispensaries out in Colorado and other places, they're not allowed to take any tax deductions. So whatever revenue they have to pay tax on it, but they can't deduct the cost of production, distribution, maintenance, rent, roach clips. I mean, anything that they, they're not allowed to take the deduction, and so
I can't imagine their margin must be so high though. Like I can imagine.
I bet you they would have charged more if they knew that going in, because it's my understanding that a lot of them didn't know it. Because I've seen some articles in the publications where they're surprised, they're shocked, that they've got to report all of their income, and they're breaking the tax law if they take any deductions against those revenues.
Well, that's amazing. Yeah. Well, Tony, I think that subject itself is a complete other podcast.
Yeah.
But you've been listening.
Did you say podcast?
Yes. No, I think so. If that doesn't exist, you should trademark it right now.
Yeah. So, it's all yours.
Thank you. You've been listening to The Advice Show, and we're part of the Sun Times Media Local Podcast Network. Our guest has been Tony Pagliuco, and again, he's part of Pagliuco, Opalis and Associates in Oak Brook. And do you have a website, Tony?
Yes, we do. It's POACPA.com. POA stands for Pagliuco, Opalis and Associates, and look us up anytime.
All right. Thanks for being here.
Oh, you're welcome. Thank you for having me.
All right. Again, thanks for joining us. Our music is by Hernan Sanchez.